Hey there, future crypto millionaires. Ever felt overwhelmed by the ups and downs of the crypto market? You're not alone. That's where dollar cost averaging, DCA, comes in. Think of it as your secret weapon for navigating the wild world of crypto investing. In simple terms, DCA is like setting up a regular investment schedule. Instead of putting all your money into crypto at once, risky, you invest small amounts at fixed intervals, like every week or month. This strategy helps you average out the purchase price of your crypto over time, reducing the impact of those scary price swings. Let's say you want to buy Bitcoin, but you're worried about buying at a peak. With DCA, you invest a fixed amount, say $50 every week, regardless of the price. This way, you buy more Bitcoin when the price is low and less when it's high, which can lead to better returns in the long run. Now, you might be wondering, why is DCA especially relevant for crypto? Well, my friends, the crypto market is notorious for its volatility. Prices can skyrocket one day and plummet the next. This unpredictable nature makes DCA a perfect fit for crypto. By investing consistently, you avoid the stress of trying to time the market perfectly. Trust me, it's nearly impossible. Imagine trying to catch a falling knife. That's what trying to time the crypto market can feel like. DCA is like wearing a protective glove. You're still participating, but with less risk. Instead of putting all your eggs in one basket and hoping for the best, DCA allows you to build your crypto portfolio gradually and strategically. One of the biggest advantages of DCA is its ability to reduce emotional decision-making. Let's face it, investing can be an emotional roller coaster, especially in the crypto world. When prices are soaring, we tend to get greedy and want to buy more. Conversely, when prices crash, fear sets in, and we're tempted to sell everything. DCA helps you stay disciplined and stick to your investment plan, regardless of market sentiment. By automating your investments, you remove the temptation to make impulsive decisions based on fear or greed. Think of DCA as your level-headed investing buddy, always there to remind you of the long-term game plan. This disciplined approach is particularly beneficial for beginners who are still learning the ropes of crypto investing. It helps you avoid making costly mistakes driven by emotion. Section 4, DCA drawbacks, what you need to know. Now, before you go all in on DCA, let's talk about some potential drawbacks. While DCA is generally considered a low-risk strategy, it's not without its limitations. One thing to consider is that DCA might not yield the absolute highest returns, especially in a rapidly bull market. If the price of a cryptocurrency consistently goes up during your DCA period, you would have made more profit by investing a lump sum at the beginning. However, keep in mind that timing the market perfectly is incredibly difficult, even for seasoned investors. DCA provides peace of mind knowing that you're not risking everything on a single price point. Another consideration is the transaction fees associated with multiple purchases. Every time you buy cryptocurrency, you'll likely incur transaction fees. These fees can eat into your profits, especially if you're investing small amounts frequently. Section 5. DCA versus lump sum, which one is right for you? So, DCA or lump sum, which one is the way to go? Well, the answer depends on your individual circumstances, risk tolerance, and investment goals. If you're new to investing and have a limited budget, DCA is an excellent way to dip your toes into the crypto waters without exposing yourself to too much risk. It allows you to start small, learn as you go, and gradually build your portfolio. On the other hand, if you have a large sum of money to invest and you're confident in your ability to handle market volatility, a lump sum investment might be suitable. However, this approach requires careful research and a deep understanding of the market. Ultimately, the best approach is the one that aligns with your financial situation and risk appetite. Section 6. Start small, dream big, DCA for the long haul. In conclusion, DCA can be a powerful tool for both beginner and seasoned crypto investors. It's a strategy that emphasizes patience, discipline, and a long-term perspective. By investing consistently over time, you can ride out market fluctuations, reduce emotional decision-making, and potentially achieve greater returns over the long run. Remember, investing is a marathon, not a sprint. DCA empowers you to participate in the exciting world of cryptocurrency while managing risk and building a solid foundation for your financial future. So start small, stay consistent, and watch your crypto portfolio grow over time. Happy investing!